Welcome to the HMO Property Show. By investors, for investors. Catch us weekly as we discuss all things cash flow positive property investing. Whether you're a seasoned investor, a new landlord, or just curious about property investing, this is the podcast for you. Sponsored by the Co-Living Collective, your trusted partner in creating vibrant and sustainable shared living experiences. Visit us at colivingcollective.com.au to learn more.
Welcome back to the HMO Property Show. I'm your host, Neil Gibb, as always, and today we're going to be talking about housing affordability reports. We are going to be sharing a lot of data that we've collated from various websites. If you listen to this on the podcast, there will be a visual aspect that you may want to jump onto YouTube to watch, or you can join our Facebook group, which is called the Perth HMO and NDIS High Cash Flow Investment Properties. Just search for Perth HMO or Perth NDIS in your search bar on Facebook and request to join the group, and we will accept you in there. The video will be in there with all the visuals. But before we get into the podcast today, I've got one quick favor to ask. So the simple way that you can help support this show is to hit the follow button on whatever platform you're listening to this. So a lot of people listen on Spotify or Apple. You can hit follow on there as well, and if you can hit follow on the YouTube channel as well, we would really appreciate that. You know, this year we really want to improve the content that we're putting out there. So we want to get better guests, we want to get better content to share with you guys, and the only free thing that I'm really going to ask you guys for in return is that you hit the follow button, because it helps the show more than you will ever imagine. It helps us get more traction. The more traction we get, the better the guest, the better the content, and yeah, helps everybody in every single way. So let's get into today's information. Today, the first document I'm going to share with you, and I'm going to put the links to all of these documents in the show notes as well, is the Real Estate Institute of Australia Housing Affordability Report. It is from December 2023, and this podcast is being recorded in March 2024. However, some of the other data that I'm going to share with you will be more relevant in today's market. But it's important to see what other people are putting out there. I will find the new housing affordability report when it is released, and I will share that with you. I'll make my head a little bit smaller. I'll put me up there. So as we know, housing affordability right now is at its lowest point in 20 years. I'm just going to put my phone on Do Not Disturb. Why is it the most unaffordable it's ever been? Well, that's because we've had massive inflation over the last few years from COVID, where the government started introducing more and more money into the system, which makes people feel like they have more money, and then they start paying more for things. However, the more money that gets introduced to the system actually devalues the strength of the dollar, and where a dollar was worth $1, now a dollar is probably worth about 65-70 cents compared to what it used to be worth. However, with inflation, there's more money in the system, which means people can pay more for things, and that pushes up the value of property in general. Property generally ties along with inflation because we have more money in the system, people can pay more for it, right? But the more expensive it becomes, the more unaffordable it starts to become from people. And affordability is one of the biggest drivers for housing growth, because when people can afford to buy it, they will buy it, and because they can afford to buy it, or they can afford the deposit on it, the banks will generally lend you money on it. Now, banks are incredibly risk averse, and they will only lend you money if they know they will get it back. So, you know, property is a hot thing. The banks love it. A lot of people say we're in some sort of housing bubble. I don't believe that. There's over $1 trillion worth of real estate in Australia, and only 20% of that have got mortgages on it. So when you look at that stat alone, we're not in a housing bubble. The market is very insulated from crashes. We've never had a crash in Australia. I think the biggest crash it's ever seen is 5%, and then the next year it went up 8% after that as well. So real estate is a very good, safe bet for everybody. Over years, historically, it's doubled in price every 10 years. And for that to happen, all it needs to do is your property needs to go up in value 7% every year to have doubled in price in 10 years. So it needs to increase 7% every year to double in price in 10 years. That's compound interest right there. So what I want to do today is talk about affordability. because affordability drives markets. If people can't afford to buy in that market, i.e. that state, then they will look elsewhere. And when it's affordable, it pushes prices up. Rental yields are definitely an attraction for people as well. People from New South Wales are aggressively buying in Western Australia right now. Even people from Brisbane, because they look at places like Gosnells and its proximity to the CBD, and they think that should be an $800,000 suburb. But people in Western Australia have obviously got the stigma attached to the suburbs of Gosnells, Armadale, Kelmscott, and the likes of them. And Western Australians would generally try and avoid them people because of the stigma around them again. But real estate is a numbers game, should be data driven, and data like the things that we're going to go through today, which will help you realise that Western Australia is still in a very good position. A few people are saying it could be overcooked, but essentially where we are now is where we were back in 2012 at the peak of the last boom, which came off the back of a mining boom. I've got some stats today which will show you that we're not in a mining boom currently. We have got a lot of work in Western Australia, which we're trying to fill the unemployment. We're bringing people into the state to fill all the jobs, but employment is still very, very low compared to other years that we've seen this. So what's caused unaffordability currently, or what's created affordability to be its lowest in 20 years? Cash. The Royal Bank of Australia has raised the official cash rate and it currently sits at 4.35%. Now, it's been on hold for the last few reviews, which is good. And it's been on hold because inflation has started tracking down towards its target range, which they want it to be. And I say they, the government, the RBA, want inflation to be in between 2 and 3% because that's normal for them. And when inflation is in that range, historically, interest rates have dropped because it's under control. The reason that the cash rate increased the way it did is because inflation was at its highest. I think it was 8.7% at one point. Don't have the exact date on that. It was August 21, 22. Cash rate started flying up. And the reason for that is that means more things become expensive. The banks try to get money back in their coffers. And by the way, the banks make some ridiculous money, even though interest rates are where they are right now and should slow things down. The big four banks between them last year made 13.4 billion, sorry, 32.4 billion between them, the big four profit. Absolutely crazy figures. So cash rate's gone up and it's made a lot of places unaffordable. Now, what is unaffordable? Now, the definition of unaffordable is if you were spending more than 30% of your gross wage on housing, then that is technically classed as being in housing stress, right? And as you can see in this graph on the right-hand side here, everybody currently is in housing stress because of where the interest rate is. Western Australia is people are using 36.7% of their gross rental income towards housing, and rental affordability is sitting at 22.4%. So we're still relatively cheap in the rental side of things, even though yields are incredibly high at the minute. The only other state which is kind of sitting around where we are is Northern Territory and the Australian Capital Territory, so Canberra, which is surprising because real estate's gone really well over in that place. But Western Australia being one of the main areas that people invest in, so let's say New South Wales, Victoria, Brisbane, WA, tends to follow that sort of cycle. South Australia slipped in there recently, that's had some really good growth. But Western Australia generally moves after Brisbane, and it generally goes New South Wales, Victoria, Queensland, Perth. Right now Perth is going crazy, and like you say, some people are saying that it's overcooked, but when we look back, we are generally where we were 10 years ago. So we've got a lot more room to grow, and the reason that we've got a lot more room to grow is because right now we've got record levels of migration, and we've got the lowest levels of housing completions and housing handovers that we've had for a long time, and I'll take you through that very soon. But as you can see, housing affordability has changed 2.2% in Western Australia over the last quarter. And again, that's because interest rates have gone up, which means it's more costly, what's the word I'm looking for? It costs more to live in a house right now, whether that's your mortgage has gone up, your electric's gone up, your gas has gone up, your rates might have changed. everything is considered when it comes to housing affordability. Now, when we look at a HMO, and I'm just going to throw this into the mix, right? A HMO, for the person that rents that room, it's got all bills included. So you don't need to worry about gas, water, electric, internet, cleaners, etc. You pay your $350, $400 a week, as some of the room rates we're seeing at the minute. And all bills are included there. So it's a nice, easy way for people to budget and save money and not know that their bills are going to fluctuate throughout the year. So currently, the weekly repayment, or the median weekly family income and proportion requirements, and the proportion required to meet loan repayments, is $2,590 per week, which is approximately 36.7% of their family income. And you can see that there shown in this graph too. But let's look at New South Wales. Right now, they're spending almost 60% of their weekly family income just to meet loan repayments. 60%. Then from that, they've got to take out groceries, living, etc., gym memberships, all the other stuff that goes in there as well. Which is why Western Australia is so attractive right now, because there's a lot of people who've got more disposable income than they have in New South Wales or Victoria. Which means that people can buy properties and still go out and still spend money in cafes, bars, go to the gym, etc. It's definitely getting tighter out there. You can see the place isn't as busy as it used to be. I went to the CBD on Saturday and it was definitely quieter than 12 months ago, 24 months ago. However, there's still a lot of people kicking around. There's still a lot of money floating around in Perth because our living expenses are a lot lower. Now, I'm going to skip through quite a bit of this document because it's not really relevant, but we're going to go to Western Australia again. And you can just see the change. And I'll see if I can make this bigger without... there we go. Perfect. I thought that was going to mess it up. But what you can see here... how do I turn that off? Right, what we can see here, family income has increased since 2013 to 2023. And the proportion of their income has also increased going towards living. And that graph just gives you a bit of a visual aspect on there. But when we look at this here, from December 22 to 2023, their income required to meet their loan repayments has gone from 33.5% to 36.7%. So it's changed quite a lot, right? I could show you this one on New South Wales. And it's gone from 54% to 58%. Victoria's gone from 54% to from 45% to 46%. So we're still very, very affordable compared to even Brisbane or Queensland, from 40% to 45%. South Australia, 39% to 44%. So Western Australia is still very, very affordable, which is great. People's median weekly family income has increased from 2,448 to 2,590. Not massive, considering when you've got a $500,000 mortgage and your proportion of that to meet the loan repayments has gone from 33 to 36. That could be substantial compared to the increase in your median family income. And the average loan repayment has gone from 3,500 to 4,100. So you can see right there, there's an increase in around $500-600 per month. But the weekly rent has only gone up, let's say $100, times that by 4, so 400. So they're still down by about $200 a week, or they're spending about $200 a week more on living. Average loan size has increased. That's just nature of the beast right now. Supply and demand. A lot of people looking to buy houses out there. There's a lot of people saying that the lower end of the market, and again, when we come back to affordability, the lower end of the market is still moving very aggressively, from $400,000 to $550,000, $600,000. And the reason for that being is right now, well, let's go back 2 years before the market took off. A lot of people from Sydney and Victoria were coming. Their mindset, the way they think about real estate, was totally different to the way people in Western Australia think about real estate. We had this long downturn. People were losing money. People were hurting for a long time in Western Australia. go to the East Coast and their markets have been bouncing. So they come over, they look at this and they go, $400,000 for a property in Gosnells is giving me a 5.5% gross return. That's a bargain, and that's going to go up in value. And that's what's drove a lot of the growth in the market. And a rising tide lifts all ships. So if the bottom of the market moves, it then pushes homeowners out of that affordable bracket into the next bracket. And we spoke to Angad and Adam on one of the podcasts just recently. They said that they're seeing that top end, or the $600,000 to $800,000 bracket move at the minute. And that's because a lot of the homeowners are getting pushed out of the affordable bracket because there's a lot of investors in that area that are buying aggressively because they've got the fear of missing out. Pushes homeowners into that next bracket. Now, somebody in my team has been looking at properties in the $1 to $1.5 million bracket, and she went to a home open the other day, and 125 people registered for a property. They had 7 agents at the house to keep up with all the demand that was in there. She said that the agents didn't even have time to stand and talk to anybody and give them any feedback. You literally went in, walked around, and they were just like, if you want to submit an offer, there's a document, email it in, we'll present it to the owners. And that's at the $1 to $1.5 million bracket as well. So there's a lot of movement in all areas of the market right now. A lot of people that are sick of missing out on properties. And we're seeing that offers, if a property is on the market for $500,000, because so many people have missed out right now, the average offer on them properties is 15 to 20% higher than the asking price, which is absolutely bonkers, because then that starts pushing people into the next bracket again, right? So that's the state of the market right now. Why is it happening? This document, or this webpage that I pulled up now, is from Macro Business to get some really good data and some really good information in these documents that they release. What I'm going to do is just skim down to this little section here, and we can see the Western Australian population change over the years. Now, the last boom that we had was kind of finished in 2013, and then we had that long downturn in 2014, and you can see that there the population changed. Why? At this time here, there was a lot of major infrastructure work going on in Perth and on the Northwest Shelf. We had the Gorgon project, we had the Wheatstone project, we had Impex, we had PNG LNG. Actually, I was really fortunate to work on some of these projects because I got to learn from some of the best companies in the world and how they do certain things. But I could also see the writing on the wall towards the end of them projects. And when I finished on the Wheatstone, there was no more big projects on the horizon. And that's, a lot of people left the state then because work brings people to the state, right? Right now we've got this population boom going on. And yes, iron ore is going well and oil and gas is going okay. I think a barrel of oil just increased in price, but we've got no major infrastructure projects or no major construction projects which are driving this population growth. These are jobs because Western Australia itself has grown. Perth has grown as a city, and more people want to move out here and create a life here now because it's absolutely stunning. One of my best friends, he's been over in the Philippines for the last year and a half, 2 years, and he always had this desire to go travelling and leave Western Australia. He's an English guy, same as me, and he came back to visit Western Australia. We had some lunch on Sunday, and he said the first thing he realised is how clean the air is and how blue the skies are and how not humid it is compared to the Philippines. I think he's planting a little seed in his head to come back, and because it really is just an incredible place to live. I'm very, very fortunate that I'm here with my wife and I get to bring up my son in Western Australia, and you know, maybe some more kids in the future, who knows. But yeah, just people are moving here now because it's a great place to be, right? And if we look at this next graph, we're seeing that in 2022 we had close to 90,000 people. It was actually 87,000 people moved to Western Australia, and in the same year we were only handed over just over 20,000 dwellings, finished dwellings. But we can see here, right, this is why we had that long slow downturn. Population decreased, but we had this massive oversupply of property that was coming into the market, and then the market started to drop. People started to stop building approvals just dropped off the edge of a cliff, And then from 2016 onwards, the population slowly started to increase. But not many people recognise this because they were so busy investing in New South Wales, Victoria and Brisbane that more and more people started moving here, but nobody was building houses. And that's how we've ended up in this massive delta right now of, I think there's something like 2,500 properties on the market, established properties to buy, and under 2,000 properties available to rent. Now, when you're looking at this one statistic here, right, of 87,000 people moving to the state just in 1 year. Whoop! Oh, what have you done, Gibby? You just clicked something and just butchered it. Oh, thank God. In 1 year. Sorry, guys. Just there alone, there's 60,000 houses short. And not all of these 87,000 people are going to be people just looking for houses. Let's say half of them are, because they might be coming over as couples. So let's say 40,000 people looking for houses. We've still only completed around 20,000 houses and handed them over that year. In 2021, 2020, 2019, 2018, there's also been a shortage of houses being handed over, but people have been moving to the state. This dip here was COVID, obviously. Otherwise, this would have just kept trending upwards like this. So right now, we've got this huge shortage in housing being handed over. But then when we look at Perth home values, they're just going through the roof, right? Because there's not enough housing out there. People are trying to outbid each other to get access to something that should be a basic human need, which is housing, right? And that's the piece of the jigsaw that we're trying to solve. And I'm not saying the HMO is the solution to the problem, but it's definitely a piece of the jigsaw. Because if we can free up some of these houses and people with families can move into them, because we move singles and couples into HMOs, then we're doing a good thing for the market. Next and last document that I want to share with you, and again, I'll put the links to these in the podcast note, guys, and into the Facebook page as well, if you're watching it in the Facebook page. There's a little section here from someone that was interviewed on 6PR, just talking about basically what we're talking about. But this is kind of what I wanted to show you, right? So in 2022-23, Australia added 518,000 net overseas migrants, and that lifted the population by 624,000. So that difference there is natural growth, people being born, etc., etc. Now, normal migration is kind of like the 160,000 limit. Well, they're saying that the average is 80,000 people per year. We've just 7x that, 6, 7, 8x that in 1 year. But look at this, even before that, there's been a lot of growth from 2003 onwards. And when people are moving to the state, this is why we need to continue building more and more houses. Now, as it stands, the HMO Property Court have put the brakes on buying established properties for our clients and converting them. Because if we're taking properties off the market, we're adding to the problem. And we're trying to bring a solution. So we've actually turned the tap off when it comes to buying established properties and converting them. And all of our focus is going on to new builds and just bringing new housing to the market, because that is what's needed. We can't do that alone. We've only got a certain amount of capital ourselves. So we are looking for investors to work with. If you want to build a new build property, we'd love to help you. We've got plenty of them in construction right now. And we've also got the property management business for when these properties are built too. So we can help you from start to finish. We've got the finance team there. We can help with site selection. We can help with all the council approvals. There will be problems with council because we've got the track record now, and we've worked with just about all of the councils in the Perth metro area. They know who we are and what we do, and we get our HMOs approved. Once they are approved, we will project manage the construction for you. And once it's finished, we'll send through a building inspector who's independent from us in the builder, and he'll give you a full report to make sure that the builder has done the right thing and we've selected the right builder for you. And then we also provide the furniture packs and the property management on the back end as well. Now, still talking about migration, and from 2020 onwards, this is basically when they opened the doors again, and we just brought all these migrants in right now. I don't know what the government are actually thinking, because they know that we've got this massive housing shortage. The housing minister, Honourable John Carey, I believe is doing a pretty good job with what he's got available. Now, don't get me wrong, he's got a lot of money available, but there's also a lot of red tape when you're operating at that level. and some of the red tape that he's got through to be delivering the housing that he is, in the different construction methodologies that he is, in the areas that he is. He's building timber frame 1 and 2 bedroom houses where historically they'd be building 3, 4 and 5 bedroom houses, double brick. So I've actually got a lot of respect for John, and I think he's doing a great job. However, it's not the government's job just to fix this. It is a massive opportunity for investors to jump in and help and make some really good money while also solving the problem, right? So last year, the population growth was 3.1% in the financial year. And we've got immigration of 2.1% of your population in a single, which is just extraordinary numbers. 2.1%. And when you're looking at population right now, I think there's 26 million in Australia. You can see why we are really struggling with not just a rental crisis, but a housing crisis, right? They're talking about here this being a rental crisis, but there is just a pure lack of accommodation. This is why there's 120 odd people turning up at a house that's worth 1.3 million, because people are just desperate at the minute to get into housing. Remember, it's a basic human need, and we as investors have the opportunity to help and support these people. So according to the Australian Bureau of Statistics, Western Australia added only 13,200 homes last financial year. So that was 22-23. That's the graph that we looked at. And that's once you account for demolition. So if they're knocking down old 3x1 on a quarter acre block and they're putting 3 or 4 properties on there, we're actually losing one house to put 3 in. So we've essentially only introduced 2 more houses to the market. 13,200 homes against a population increase of 87,000, 61,600 of which were from net overseas migration. That is people moving from another country into Western Australia, not Sydney, not Melbourne, not Brisbane, Western Australia. And we only completed 13,200 homes. So Western Australia only added 1 home per 6.6 new residents last financial year. That is the reason why Western Australia has the lowest rental vacancy rate in the nation, according to data released by PropTrack. I'll also put the link to PropTrack in the list as well. But if we look here, and I'm not going to be able to click on this. Yeah, it's done it again. So Perth vacancy rate 0.75%. It's gone down in February 0.13%. Over the quarter, it's gone down 0.1% and an annual change of 0.02%. Since March 2022, it's dropped a massive 70%. And that's because the Real Estate Institute of Western Australia say that a balanced market for rental properties is 8,000 to 9,000 properties on the market at any one time. That's what they say a balanced market is. Now, they were also saying that was a balanced market before they added 87,000 people into the country in 1 year. So I believe now that a balanced market in the rental space should be between 10 and 11,000 properties. Right now we've got about 2,000 and we're only building 13,000 homes a year. Now, of them 13,000 homes, they're not all investment properties. This is first home buyers moving into the market, and I'll go back to this stat here. Number of loans to first home buyers, 4,277. This was in December 2023. So let's times that by 4, 8, 12, 16,000 new home buyers into the market, which means that that could have been, them 13,200 homes could have just been first home buyers altogether, right? There is investors building investment stock now. There's more and more people buying blocks of land. We're seeing more dual key stuff coming through as well. We've got plenty of HMOs in the ground right now come through construction, and we will probably double the size of our rent roll when everything in construction is finished. That's the volume that we've got going on at the minute. What else can I share with you? So Perth rental vacancy rate was just 0.75% in February versus 1% across the combined capitals, which is also a record low. So whilst the country is struggling, Western Australia is struggling the most, but it's also the most affordable, which is why we're getting more investment from interstate into our state as well. Now, looking at them stats there, right, it's pretty plain to see that this problem is not going to be fixed overnight. This is going to take time. This is going to take energy. This is going to take investment. The government are building, I think he's spending 2.6 billion to provide 3,000 houses to the market, if I'm not correct, but they're social houses. That's housing that the government will provide for people that are on the social housing waiting list. By the way, 3,000 houses sounds a lot, right? There's over 35,000 people on the social house waiting list. So he's spending 2.6 billion and he's only scratching the surface of what's required. That's how big the problem is. The government cannot fix this problem, guys. This is a huge opportunity for investors to step in. We are not providing social housing. We are providing the gap between social housing and the private rental market. That is where the HMO sits. It's the absolute sweet spot. Affordable accommodation will always be needed in the market. The HMO is here to stay. People always ask me what type of people live in these properties and why do they live in these properties. If you're listening to this podcast or you are investing in real estate, then you are definitely not one of the people that needs to rent a HMO or rent a room in a HMO. But there is plenty of people out there that are not as fortunate as you to have the jobs that you've got, the investment acumen that you've got, the knowledge that you've got to move forward with your investments. So the market is absolutely huge. The way that people are living is changing. We no longer have a small house on the quarter-acre block with a big garden so that the kids and the dogs can play there. People don't want that anymore. The baby boomers are retiring and downsizing. Then properties that they lived in for many years are then getting developed into smaller, high-density units so that we can get more people in close to the CBD. But then properties are expensive and people on minimum wage, and not only people on minimum wage, but if I did a podcast, I think it was episode 65-ish, called the Anglicare Australia report, or the Essential Workers report from Anglicare Australia. And the Essential Workers report was a snapshot of the market at a certain point. And Anglicare Australia wanted to see how many properties were available in Australia and then broken down state by state for a cohort of workers which they class as essential workers. You can go back and listen to the podcast. I can share the bits with you now. So essential workers are classed as firemen, ambulance workers, hairdressers, social workers, teachers, a cohort of workers which earn an average wage. But they are now getting priced out of the market because on that night that they took the snapshot, which was March 2023, in Western Australia, there was only 6 properties that were classed as affordable for that cohort of workers. Now, I don't know about you, but if I can get that caliber of tenancy into my housing, into my investment properties, I'll be very, very happy, because they essentially wake up in the morning, have a shower, have the breakfast, go to work, come home, have the dinner, have a shower, go to bed, rinse and repeat 5 days a week. They might get the weekends off if they're lucky. But these are the people that we're renting houses to now. The caliber is changing. We've got social security, cyber security, computer guys renting rooms. We've got accountants renting rooms at the minute. We've got firemen renting rooms at the minute. The caliber of people is changing, and I can't see it. I honestly cannot see the solution or the end of this problem for another 3 to 4, maybe 5 years, because we're just not building houses fast enough. So I hope that helped, guys. Thank you for following the podcast. Thank you for following our content. I hope you get value from it. If it is, like I say at the start of the podcast, it would mean a lot to us if you could hit that follow button, because it helps the show more than you could imagine. It gets the content to more and more people, gets more and more followers. The more followers we get, the better content we can put out there, the better guests we can bring on the show. So thank you again, and I will see you all again next week.
Thanks for watching. Make sure you tune in the same time next week so you can stay up to date with all cash flow positive property updates.